Hello everyone, good morning or good afternoon or good night if you are at the other side. My name is Andre, I'm a global market analyst. I want to share with you some of the patterns that I identify inside the markets. Some of them are not printed yet. We need to wait for those patterns to be printed, so we need to wait for validation. But that's how I tend to look inside the market. So I try to project based on the most recent price action. I try to project the next pattern closer to the price at that moment, and I will try to take advantage from those. So I will try to cover a few instruments today. Like I will start with this Aussie versus New Zealand. We are moving. This is a 2 hours time frame chart. It's a lower time frame. And as we can see, we are moving sideways. So we are going nowhere between this pivot zone, between this previous structure support resistance and this most recent major support, the previous bottom. So at this point, I need to wait for the patterns to develop, but based on the most recent price action, I will wait for the bearish shark pattern at 1618 extension. It will respect those highs if printed. Eventually it can trade a few points above, but the idea is to respect those highs and to respect this resistance, and then to pull back at least to the 50% retracement as the default target for the bearish shark pattern. As we can see, the market has printed this bearish pattern at 88% retracement, moving average, the 200 moving average also acting as a pressure element, acting as a resistance. Then the market has printed a new higher low above those previous ones, and it has started it has entered a corrective momentum. So at this point I can see and I can wait for the pattern to be forged above. If the pattern it's printed, we can try to take some advantage from that price action. So this is Aussie versus New Zealand. Obviously, if not printed, eventually the price will keep respecting this media as the resistance, as we can see now, and it should force the price to trade lower. And if so, if the price violates this previous or most recent support level, I believe I'm sure that will invalidate the possibilities to forge this bearish shark pattern if the price starts to sink from there. So Aussie versus New Zealand, I will stay alert around a few points below this price level. I will take my alerts in consideration, and I will decide what to do once the price approaches that level. New Zealand versus dollar. And New Zealand versus dollar, this is also a 2 hours time frame chart. I will change into a 4 hours time frame. Actually, I will increase this a little bit into a 8 hours time frame chart. So we are now, based on the most recent price action, we are now facing or trading the 88% retracement is the default target or the default Fibonacci level for the BAT pattern at 88% retracement. Let me just add the extension from this previous swing. I will search for the 127 extension. So and actually the market is trading eventually two different patterns at the same completion point, the Gartley and the BAT pattern. The Gartley because the market has crossed the 618 retracement here, as we can see. So this, let me change this into black. So this golden ratio here, it's one of the criteria for the Gartley pattern, but then the market needs to find the support again at the golden ratio, and the market has violated that level a few points below. I'm not sure if the market has traded at the 78 retracement. Let's check that exactly. The market has nailed the 78% retracement, invalidating one of the second criteria for the Gartley pattern that later should be printed at 127 extension, but invalidating these criteria will let's say will validate the eventual bearish bat pattern, and if there's synchronization or some confluence between those Fibonacci levels, even better. So it will print the bearish bat pattern. We expect the bearish bat pattern at 88% retracement. Note that is not the first, it will not be the last one. The Gartley printed at 141 extension. It makes no difference because actually both of those patterns will trade the default target, will put a default target at 38% retracement from this structure high. So the market has nailed the 141 extension and it has started to fall from there. So we need to adjust our Fibonacci level and we will search for a pullback to the 38% retracement. It will retest the previous structure resistance. So the 38% retracement is a default target for the New Zealand versus dollar. Trading above these levels, which is not impossible, there's the crab pattern positioned a few points above, just to violate, just to break this previous structure a few points above it. The 1608 extension, actually this is a pattern that will not search for the 224, so the market needs to respect this level to work. So if printed, and this is the one that I'm expecting the market to print, if printed, the market will search for again the 38% retracement, but from that structure high. So I need to wait for the market to print that pattern and to measure the potential for my shorts. So I have a default target position at 90 pips, 91 pips below. So those 91 pips allows me to identify my limits if I want to trade with a friendly risk-reward approach. So 90 pips above is a one-to-one risk-reward approach, and I will try to minimize that same risk, trying to respect or trying to try to take in consideration the possibility for the market to develop this alt bat pattern at 113 extension. So the market will fail the bat and will extend above. Eventually, if the market fails to respect this crab pattern at 1608 extension, just a few points above the previous structural resistance, I will admit the possibility for the market to extend it to the 113 extension to print the alternate bat pattern. Okay, and I need to respect that level. So that said, I need to try to minimize my loss in consideration to my eventual reward, and I can try to minimize my risk a few points there. If you feel comfortable with a one-to-one risk-reward approach, take a special attention on the position size for those trades, and to, not only for harmonic trading or advanced pattern formations. I believe we should, as traders, we should take in consideration the position size of our entries. So I can use a one-to-one risk-reward approach. Eventually, I will decrease my position size, my initial position size. I will decrease that position size a little bit. So if I try to minimize my losses, I will try to adjust adjust my position size based on that setup configuration. Okay, but let's keep that conversation for another video, the risk reward and how we measure and how to take advantage from those patterns, assuming the best or a friendly risk reward approach. So New Zealand versus dollar, I will try this crab pattern positioned at 0.67. So this is my level for potential short the market on New Zealand. Euro versus dollar, I will try to get faster from here in order to try to cover more charts. So euro versus dollar is trading higher. The market has violated this previous structure and we are now trading above it. I believe the market will keep trading higher, eventually from here, but there's always a possibility for the market to fail my default analysis, and I like to take in consideration, okay, if the market fails me to trade higher, where is the next advanced pattern where I can try to take advantage from. So bearish shark pattern at 1618 extension and bearish shark pattern at 224 extension. I believe a new high above this resistance is about to be formed, so I will take in consideration this shark pattern at 224, which is positioned at 114.59. So this is the bearish shark pattern that I will search for, and actually for those who are searching for a bearish opportunity, I believe it can work and obviously we need to check market conditions once the market approaches that level. So we need to take a look on our indicators as RSI or MACD, and for those who are using others like as stochastic and other indicators, you can try to take advantage from those two. So if the market fails to trade above, below we have the potential or one eventual Gartley pattern, which is positioned at 127 extension and is positioned at 113.25. So this is the default target for the Gartley pattern. The market tends to search for the 38% retracement, and the target for the eventual bearish shark is positioned at 50% retracement, but usually I will use the previous price structure. So we have this resistance here, the one that we are now rejecting to trade above. So this resistance level synced with the 38% retracement. So if the price prints me this shark pattern, the 38% retracement synced with this previous structure resistance will be my first target, assuming that usually the shark pattern will search for the 50% retracement, because it will complete the 5-0 sequence, which usually will keep trading in the direction of the previous trend. Okay, so this shark pattern at 224 extension, this shark pattern at 224 extension should search for the 50% retracement, and it should provide us an entry point at 50% retracement to buy this market. Okay, assumption after assumption, we need to wait for the market to develop, to validate those eventual or to increase those the probabilities for the price to develop into those patterns. Okay, so euro versus dollar, a short position at 114.59 and one eventually buy opportunity at 113.25. Cable is also trading. It's an awesome setup here. We have bought this bullish. Actually, we're still trading this bullish bat pattern. It was printed at 88% retracement. I shared this among my subscribers and among other communities. Okay, the market it will print that bat pattern. Will they push the price above? We never know about that. What I know is the pattern is printed, it allows me to enter the market with a friendly risk-reward approach, positioning my stop losses below the initial point or the starting point of the pattern, and try to take profits at 38 and the 61x retracement levels, the first and second target. So we are now at second target. We have this position secured at profits with dynamic and a trailing stop just following the price. So each pip the price moves up, my stop loss moves up the same amount of pips. That said, this is cable. I will decrease this into a 4-hour time frame because we are trading a critical area here. So we are approaching this bearish descending structure trend line as potential resistance level or pressure zone. We are trading the golden ratio, the second target, and the market is trading at divergence at this point. So we have the first high, and we are now trading above the previous resistance, the previous high, and as we can see, the RSI is trading below. So this is what we call bearish divergence at this structured trend line at golden ratio, and filling some of the criteria for one eventual bullish shark pattern that should be printed at 161.8 extension or eventually at 224 extension. So I always take in consideration the first level, the 168 extension. If the market starts to trade lower, I admit they will print the shark at 224 extension, retesting this, printing a deeper pullback, retesting the lows. But at this point, based on the most recent price action, we can wait for this. This will print the shark also at confluence with the 50% retracement from all these bullish momentum. So I still believe there's room for cable to trade even higher. As we can see, the market is pushing, squeezing higher. Let's just following this price. I believe there's room above, but if the market fails, it can search for the 50% retracement at 128.75, 168 extension. It will print this bullish shark pattern eventually, and again we need to validate that pattern. Once the price starts to approach that price level, we need to take into consideration other indicators that may guide us or provide us more confidence to that same pattern. So at this point, there's nothing printed, only this bearish. We are trading the 224 extension from this previous structure swing. So this the last swing that has printed this low. So we are now trading the 224 extension and above the 200 moving average. So I will not be surprised, and because we have divergence, I will not be surprised to see the price somehow rejecting to trade higher and starting to trade lower. So again, I believe there's room to trade above, but if the market rejects that idea, which is also possible, I believe the market will search for a deeper pullback. A deeper pullback at 50% retracement will print the sequence, the 5-0 sequence, which allow us to engage the market in a bullish direction again. So at this point, if this blue shark pattern starts to work, we'll search for the 50% retracement. Let me just adjust this Fibonacci level and clear this reward. But let me just adjust this Fibonacci. So the 50% retracement is also positioned. It's already positioned at a few points above the 168 extension. Let me just measure this. We need to adjust this also, this extension. So at this point, the shark will be completed at 128.58, so a few points below the initial point, and the 50% retracement is positioned at here. So we what we have now, after small adjustments to this most recent structure high, what we have is a potential shark at 168 extension at confluence with the golden ratio, which is even better than the 50% retracement, no, in terms of power of or strength of the Fibonacci levels. For some reason we call the 618 retracement as the golden ratio. Okay, so at this point I admit, if the price decides to trade above, as I expect to, I admit the possibility for the price to sink, retesting this previous structure resistance, as we can see, synced with this 1618 Fibonacci extension level. Cable with a buy opportunity below, and now trading bearish divergence with room above to trade above. Let's wait and see. Nothing specific for now for cable. So let's jump to another one. Dollar versus CHF. Also threatening this bullish ascending trend line. I will increase this into 12 hours time frame chart. We are trading the bearish shark pattern at 224 extension. I don't believe or not, so I admit the possibilities or the probabilities based on the pattern that the price is printing. So rejecting to trade above the 224 extension and breaking this structured trend line as a bullish ascending structured trend line as support level. I admit a fall and searching for a minimum of 38% retracement. As I said before, the shark pattern tends to search for the 50% retracement. At this point, I have no decent structure at 50% retracement. I have decent structure at the golden ratio, the second target, and I have decent structure at 38% retracement. So based on the structure and not based on the default targets for the pattern, I admit first target at 38% retracement, one eventual second target at 50% retracement, and then a third target at the golden ratio, or 1 and 2 targets at 38 and the golden ratio at 60-on-8 retracement. So those who are trading breakouts, I admit you will wait for the breakout of this structure in order to position yourself inside this market. The best engagement level is positioned at 224 extension. Note that the market has extended a few points above, and the potential reward for this trade is something like 160 points below. 160 points below, you can try 1-2 risk reward approach, trying something like, or actually even better. But okay, we can try, let's say, a 1-2 risk reward approach, 80 points as a stop loss, and 160 points as potential reward. So this is dollar versus CHF, which can invalidate or be invalidated with if the market decides to trade higher. Obviously, it's printed, decent trade over there. Dollar versus CAD. Dollar versus CAD is also it has already printed this cipher pattern at 78% retracement here at this structured trend line. This is a bearish structured trend line acting as a resistance. The price has nailed that level, that structure, that trend line, and it has synced into almost a 50% retracement, so filling at least the first target, and it's now trading above that level, and eventually, I'm saying eventually because I need the pattern to work only once. I know I don't need the pattern to work twice, but eventually the market is offering a second opportunity to trade lower with dollar versus CHF. There's kind of an head and shoulder formed. I'm not so clear in terms of a neck zone. I don't like those ascending necks. I tend to ignore these neck zones as heads and shoulder necks, but it's possible to see this as a potential or one eventual heads and shoulder formation. So no matter what we see here, the market needs to violate this structure. So once the price violates this structure, will increase the probabilities to trade even lower. At this point, it's not clear, and we have actually, let me just measure this previous swing and project it below. Eventually, if the price rejects to trade above this high, I admit the possibility for one eventual bullish sharp pattern at 168 extension. I admit that possibility, which can extend to the 224 extension, obviously. But again, for those who are trying to engage the market in a bearish direction, and because we have this, I will call it annoying head and shoulder under formation. So I admit trading, waiting for the breakout of this structure is the best you can do if you trade the structure breakouts. At least that's what you will wait for. So the breakout of that structure. So I'm not involved in this trade anymore. My short position was here, and first target reached at this point. So not a clear shot at this point from here. I will not say the market will not provide me another opportunity here or provide us another opportunity here, but because it's not a clear, it's not so clear as I expect, I prefer to stay away from CAD. Dollar versus NOK, it has already achieved the default target for the bat pattern, and for now we can go into a 2 hours time frame chart. Well, eventually I can see this as a inverted heads and shoulders. Let me measure this swing here. I'm searching for the 127 extension. The market has filled the 127 extension, and based on the most recent price action and Fibonacci criteria, one eventual cipher pattern retesting the highs at 78% retracement based on the most recent price action is what I can I admit the price can develop into this cipher pattern and retesting the highs, and again, so the bearish pattern is it was printed above at 88% retracement. The market has synced from there, is already trading, rejecting to trade below the 38% retracement, as we can see. So based on the most recent price action, inverted head and shoulder, potential bearish cipher pattern if we need a price something like 8.42, and again the market can break structure and trade lower without filling that pattern. Okay, I'm just saying if the market decides to retest those highs, it will print the cipher at the completion point for this major bullish or this major bearish bat pattern at 88% retracement. So we have kind of confluence between the previous printed pattern and the one eventual one at this level. So wait for those completion points and don't rush your trades. And just because we think, or just because we have a pattern above projected, we will not buy the market just because. Okay, we need a motive to buy the market with targets at that level. So if we don't have a motive to engage the market, a strong motive to engage, or a pattern to trade the market above, we just wait for the market. We can wait for the market to develop and to print the pattern, and we can try to position ourselves inside this trade once the pattern is printed. Again, wait for the pattern completion point, measure your reward, measure your limits, and adjust your position size for your trades. Dollar versus Mexican peso. Let me try a daily time frame chart. What is this? Daily time frame chart. The market it's now suffering with a lot of pressure, bearish pressure from here. The market has retested these previous structure highs already at 78% retracement. So, and some of you will say, so this is an engagement level, the 78% retracement. It can be. It's usually it will act as a pressure zone, but the pattern, the default BAT pattern will complete at the 88% retracement, which will provide us a much better risk-reward approach. So I will target the 38% retracement, I will target 4.80%, and I can try to minimize my loss, maximizing my profits. That's the objective. Trading for the 78% retracement. From here, you have your reward, 3.67, and it will force you to use a one-to-one risk reward. If you don't respect these previous structure highs, they can hunt you down if you try to minimize your losses. So I admit, shorting the market at 78% retracement will force me to use a one-to-one risk reward approach, and each point the market prints above my entry point will decrease my target, because the market will move above, will decrease my target, and I'm forced to use a not so friendly risk reward approach if that is the case. So if the market decides to print a few points above my entry, my reward will not be the same, because the market tends to search for the 38% retracement from the structure highs, not from my entry. The market don't give a damn about my entry point. So I entry here, or actually I enter the market at 78% retracement. The market decides to print that BAT pattern, and I need to adjust my targets. So I lose my reward in consideration to my risk for my initial risk. That said, I prefer to respect, and based on the Fibonacci criteria the market has offers, I prefer to wait for the 88% retracement. If the market decides to print me that pattern, I will try to put an alert a few points below, and if the pattern is printed, I will try a short there with stops above. Okay, dollar versus Mexican peso on a daily time frame chart. Euro versus yen. This is a 4 hours time frame chart. We are approaching also the bearish BAT pattern at 88% retracement. I admit a retest to the 200 moving average, and this is the 50% retracement from all this bearish momentum. So I have a chart published from these tops. I have nailed the market with a pattern to trade below. Actually, I believe I can identify that pattern for you at this point. Shark at 224 extension. And we have more. We have actually a confluence between two harmonic patterns, but I have nailed the market there. I shared this trade among my communities, and after this very strong momentum, I admit a retest of this moving average, the 200 moving average, on a 4 hours time frame chart at confluence with the completion point for the bearish pattern at 50% retracement. So it's kind of it's interesting at least to follow this price action at this point. So note that we are trading bearish. We have the bearish divergence already inside the market, which has forced the price to pull back a few points. I'm not so sure how many, but we can measure these. 60 points below. The market has produced 60 points after this bearish divergence, which I can see being invalidated, trading higher to complete this bearish pattern at 88% retracement. So at this point, we have one eventual bearish pattern at 129,800. So this is the price for the completion point, and by default the pattern will trade the 38% retracement, which is positioned at this level. So entry point, target zone, 1-to-1 risk reward. We'll put the prices, we'll put our stop loss at these levels. We can try to minimize a few points. We have no much room to try to minimize that, but we can try to minimize that loss. Note that we have also the golden ratio here, the 618 retracement, and it's also in the middle of the 50% in the golden ratio. We have the default projection for this inverted head and shoulders. So stay tuned with this euro versus yen. Cable pound versus yen, also approaching the alternate pattern. Not so clear. I don't like this criteria here, this point B formation. It can happen strong bullish momentum, 113 extension and approaching, which tends to actually the market has nailed already that level, is trying to move above it, but again it's not so clear. 113 extension, I need the price to reject that level and start to trade lower from this level again, and also with bearish divergence between the most recent structure highs, but again not so clear. I prefer to stay away from this instrument. CAD versus yen. CAD versus yen, it's a similar pattern. It's a shark pattern at 168 extension, and again the market is already violating or breaking the most recent structure printed above. So we are now trading below this structure. 200 moving average right below it can act as a support, but again failing, and I need the market to violate this previous structure support in order to increase the probability for this pattern to be printed. No, so we need to wait a lot. This is a 2 hour time frame chart, so we need to wait eventually a couple of sessions in order to achieve those levels, and that will depend on the strength of the movement, obviously. But we are now breaking this structure, which tends to search for the previous structure support or resistance. So in this case the price is moving down, and I admit the possibility to retest this previous structure as previous structure support. Again, I need to validate that pattern once completed. I need to wait for bullish divergence. I need to check the market conditions once the price approaches that level. Euro versus Aussie. Interesting chart here. because we are now trading the bullish shark pattern at 1618 extension. So this is the entry point for a potential bullish shark pattern that usually will search for targets between the 38, as I mentioned before, between the 38 and the 50% retracement. So again, we have nice structure, nice previous structure, this kind of pivot here. This previous structure support synced with the 38% retracement. The 38% retracement is also synced with that price zone. Actually, it's even better because it will retest the previous structure support and the previous one. And the most recent one, actually, here we have this pushback here, this low here, sorry, retesting that structure. Also synced with the 50% retracement, which is the default target for this. Actually, it's not a shark pattern, it's a crab pattern. This crab pattern at 1618 extension, and a few points below we have the default major bat pattern at 88% retracement. And that one is the one that I will search for, because again it will offer me a best risk reward opportunity to trade. Stop losses positioned below, we will target the 38% retracement, and well, as you can see, it will be possible to engage the market with a friendly risk reward approach. So if you need a price, I need the 88% retracement at 156,708. So it's actually, we have the price there at Fibonacci level. Okay, Euro versus New Zealand. There's room to trade below this price level, so we are now facing the golden ratio from all this bullish momentum. We are now facing that level, that Fibonacci level. A few points below we have the 224 extension for a shark at 224 extension. So we have two levels, or actually the shark pattern can be printed between the 1618 extension and the 224 extension. So somewhere between those levels, the market will start to develop a bullish structure. So let's imagine the market will start to print me some wedge or something that allows me to identify a breakout of that structure, increasing probabilities to trade above, and usually it's what I will search for. There, as I said before, so there are two levels for the completion point. I tend to search for the 1618 extension as the first one, and if the market fails that level, I will search for the 224 extension. But in the middle of those levels, the market can develop into a different structure that allows us to identify one eventual bullish breakout. If we need a price, we have previous structure support synced with the 1618 extension here, and not so clear support and resistance levels synced with the 224 extension. But those are the levels for the completion point for those patterns. Again, if somehow the market starts to trade above, we need to adjust our Fibonacci levels to that low, because the market tends to search for the 50% retracement. Actually, if this is the new low here, and if the price decides to search for the default target, it will retest the previous structure support there. So I will not be surprised to somehow the price to reject to trade below the 200 moving average and trade above it, searching for that Fibonacci level. Euro versus New Zealand. Pound versus Aussie. It's developing kind of head and shoulder, so we need to validate that. Nothing granted for now, so I can see a retest of the highs of the left shoulder as a right shoulder. So I admit a retest, and that's how I like to search for. That's what I like to search on those head and shoulder formations. So I like to identify one horizontal neck zone. This is not so clear, but it's an horizontal neck zone, and I need the right shoulder to close below the left shoulder highs. Okay, so what I'm saying is I admit the market to retest those highs, but I need it to reject to trade above it. Okay, and if that happens, we can try an engagement at this right shoulder formation which stops above the head, and try to take advantage from a potential retest of this previous structure support, the neck, and eventually the breakout of that structure. Note that right below the neck zone we have one eventual cipher pattern at 78% retracement, which tends to search for the 38% retracement. It's already positioned here. So I admit the 38% retracement pullback as a retest of the broken neck. So if the market decides to print me this cipher pattern violating this structure neck zone, I admit this pullback as a retest of this neck, and I admit from here the price will trade lower or even lower. Okay, at this point I admit I'm waiting for the right shoulder to be printed or the cipher pattern. That will depend. Note that the right shoulder can be, actually let me just measure this, one eventual right shoulder printed at 78% retracement is the limit. And actually before that, as we can see, the golden ratio, a golden ratio pullback from here will put the price retesting these left shoulder highs, and that's even better from in my point of view. It's even better when we make an analysis and we try to, and we find those type of confluence between the golden ratio and those pressure zones inside the market. So this is the left shoulder highs, and I admit a retest of that structure, but I need the price to reject to trade above, or to close, to reject to close above those highs. But by manuals, we also know the right shoulder can violate the left shoulder and be printed at 78% retracement, and this is the limit for the market to print the right shoulder. So there's a limit for everything. There's always a price for invalidation, and in this case, if you are trading patterns, there always a specific behavior or a Fibonacci level broken that will which will invalidate the pattern that we are expecting. So trading above the 78% retracement, I'm not saying the short will not be possible from above, but it will invalidate this shape and this price action as an head and shoulder formation. So it can be printed at 78% retracement as the limits. Okay, the way I like to search for it's to respect the left shoulder, as I said before. Okay, bullish opportunities at the cipher territory below 175.93 as a potential retest of the previous structure. Nothing more than that. This is cable versus Aussie. Cable versus New Zealand, this was one amazing short opportunity from the highs that we engaged, and the market has decided, as we can see here, has decided to print some support, to find support at 78% retracement and the completion point for the cipher pattern. Usually the market will search for the 38% retracement, but I admit the possibility to develop kind of, and again, a kind of head and shoulder with diagonal or descending neck zone, but I like to see those golden ratios positioned at confluence or synced with these pieces of data. And that said, I admit the possibility to form one eventual head and shoulder at golden ratio at the highs of the left shoulder. So as we can see, the market has worked well from this level, oversold, and well, let's wait and see. Note that we are already trading previous structure resistance and support level. So we actually we need the market to break this level or to reject to trade above it. So trading above it will increase the probabilities to achieve those levels, and rejecting to trade above it will increase probabilities to trade lower, or at least to retest those lows, or eventually to trade lower. Cable versus New Zealand. Now let's go into dollar index, because from here I will talk about the dollar index, the S&P, the gold, silver, I'm sorry, and DAX. This is Dixie, and those who are subscribing my services, and not only because I work also for the Forex Analytics community, as some of you already know. So this is a chart that has been published and shared among those communities. I was saying, okay, there are some kind of confluence between those two harmonic patterns. There's a target to be filled. The market has rejected to fill that target zone, but I truly admit the dollar will trade at least at 38% retracement. We are not far away from that price level, and 95, 92. So this is my target for those patterns above that. This is my default first target for those patterns above $4. I admit this as a breakout of the structure, actually a structure breakout. Let me just adjust that to these structural lows first. So the market has violated this ascending momentum. So this ascending structure has been broken, and we are now trading lower. So there's one eventual structure trend line approaching from below. Actually, we can use this trend line connecting those lows instead of connecting those close prices. And I admit the 38% retracement and the bounce from here, using this structure trend line as a support, and the violation of this trend line will increase the probabilities to trade even lower. So we have the 200 moving average below, and based on what we see here, I can imagine, and this is just my imagination at work, but I can imagine dollar index trading at the golden ratio, searching for the 200 media average, something around 95.11, as I said before, those completion points. S&P, this is S&P 500. This is a very interesting price action, because let me try to clear this. So we have 1, 2, 3 waves. This is a bearish corrective structure. The reason why I say this is a corrective structure or correction, ABC correction, is because we have bullish divergence between those lows. So we have the first bottom and we have the second bottom, and as we can see between the RSI and the price, we have bullish divergence, which has forced the price to rally above. So at this point, I will go into a 4-hour time frame chart. I was commenting, I was sharing these charts with a friend yesterday, and with one of my subscribers also. We were discussing these charts, and I end up not sharing with them this specific chart. I shared this on Twitter more recently. earlier this morning. So we have this is a 2-hour time frame chart on S&P, and we have this eventual head and shoulder information under formation. So as we can see, the market did not feel the 78% retracement as the extreme level to form, or the limits to form the right shoulder. We are rejecting to trade above the golden ratio, and we are now again a few points below the highs of the left shoulder. So I admit the right shoulder is now being formed. I admit a retest of this next zone as a starting point, and I admit this projection, the default projection for the head and shoulder formations position at 26.48. I admit that possibility also, but a few points below, a few points above that level, we have this bullish pattern at confluence between the golden ratio and the 1618 extension. So this is the shark pattern position at 2661, eventual 2618, because we have here a double bottom, a broken neck, a resistance above the neck, and we have, if the price falls down into this level, it will print me the 2618. It's nothing more than a double bottom validated with a broken neck, followed by a retracement to the golden ratio, to the 618 retracement. So if the market decides to print me that shark pattern, I have a strong motive to participate and to get involved in this market, positioning my stops below, and I will try to retest the previous structure highs as my first target. Eventual 2618 supported with the shark. I can use two targets for this pattern. I can use the structure because I'm trading the 2618 setup. So usually the 2618 will break these previous structure highs, but I will start trading. I will put my first target at these close prices above. So this is my first target, and second targets above this structure. It doesn't matter for now, but if the price decides to print me that shark pattern, I can put my targets above at this structure or at the 50% retracement, which is a default target for the shark pattern. So it will depend on your decisions and your criteria. I prefer to take advantage from the 2618 trade setup because we have already a price pattern behavior as a potential reversal behavior. So I need this pattern to work and to put the price trading against the most recent trend. So I need the breakout and the trend reversal behavior. And that said, I prefer to wait for this pullback to buy the market with confidence, with stops below these structure lows. Again, if we go into a 4 hours time frame, actually I go into a 12 hours time frame chart, there's room above for S&P 500. So what we have here, as I said before, we have a 3 waves structure down at divergence. We have one first retracement here between the 38 and the 50% retracement, followed by an extension at 127 extension. So what we have here is some of the criteria that will validate, which will validate later the cipher pattern, okay? And the cipher pattern should be followed by the 78% retracement. So I need the price to pull back to the 78% retracement from here to print me that bearish cipher pattern at 78% retracement. Okay, so this is the bearish pattern that I admit the price can print us, retesting previous structure support and resistance levels, at least previous structure support and small resistance, approaching small resistance level at 78% retracement. So at some point I admit S&P will trade at above around 28.68, but for that to happen Obviously we need the price to violate this structure's resistance, to approach the 200 moving average and to break that moving average above it eventually, because it will depend on the strength of the movement. Eventually the price will keep below this media, but at least I admit there's room for S&P to trade higher, but again we need to increase the probabilities for that pattern to be printed. We need these structures resistance to be broken. Okay, and I obviously do never ignore the possibility to keep trading even lower. Actually, we can see this as one eventual bearish descending structure. We never know what the price will print us, but it can happen. It can print me some type of the 3 drives pattern with 1, 2, and the third bottom. But we need confirmations until there. So for now, we stay between that 4-hour time frame and 4-hour time frame chart and this eventual bearish sharp pattern at 78% retracement for S&P. Silver, I was expecting yesterday. I was expecting. Let me try to change this because I believe I have that draw here. So what we have here is it's a simple process. It's a simple pattern. It's the 5-0 pattern. So the market has found resistance at 224 extension from this previous swing. At 224 extension, the market has decided to pull back. At this point, I can wait for the completion of a sequence of the 5-0 sequence. So it's a pattern that will offer us an opportunity to buy the market at 50% retracement from all this bullish momentum, from this bottom to these highs. The 50% retracement, it will print me the 5-0 pattern, which by default I tend to project an ABCD pattern above, where AB is equal to CD. But obviously when I trade those patterns, I usually use a first target at these close prices. Eventually I can use the highs, but these close prices is my first target, and then a second target above those levels. And in this case, because we are trading silver, I prefer to adjust my stops and to adjust my targets based on eventual structure false breakouts. What I mean is, I need the market to extend above these levels, but the market can fail to extend above. And if the market fails to extend above, I will search for this 113 extension from this bearish swing. So if the market prints me the 50% retracement and then starts to trade higher, and if the price rejects the idea to trade even higher, extending, I admit the false breakout at 113 extension, and from here I will see the price trading even lower, because I will use again an extension from the 113 extension to this previous structure's support, and I will search for one eventual shark pattern at 1618 reversal Fibonacci level. What I'm saying is, I need the 50% followed by a false breakout above, and if the market violates again this entry point, so this entry for the pattern that I will show you now, if the pattern later decides to violate this structure support, I admit the shark position, the bullish shark position at this point. It's too soon to predict and to forecast that pattern, so let's ignore that 1618 extension for now. And because I want to get focused on the pattern that we are approaching or close to, so the 5-0 pattern at 50% retracement, so 1458 is my entry level. I will use 1% versus 140% for my risk reward. And well, it's one attempt. It's just one attempt to try to go long with silver from these lows. And because I need to finish, let's finish with DAX, which is also filling some of the criteria to develop one eventual shark pattern at 1618 extension, which can then later offer us a new bullish momentum. And why? Because we have also on DAX this double bottom, the neck, the broken neck, and the resistance above the neck, and now I need a deeper pullback to the golden ratio. Okay, at the golden ratio we have the 2618. Okay, this is a bullish trade setup, and from the bullish and from the golden ratio we project the first wave from the bottom to the most recent resistance, and we project that as an ABCD pattern. And if that starts to happen, I will try to update those charts among the communities, but the minimum expectation or a decent expectation for the 2618 trade setups is an ABCD pattern. Usually the price will extend a few points above. It will search for sometimes the price will search for the 261 extension from the bottom to the most recent resistance. So we have a lot of room based on that pattern. Let's use the 224 extension. Actually, you can see it in our charts. So this ABCD pattern can extend to with silver to those levels. First things first, and one step after another. Don't rush your trade and don't start to buy the market just because we have default projections above. But well, we wait for the completion point for this bullish and eventual bullish sharp pattern at confluence with these 2618 trade setup, and we try to take advantage from here. So 1124 is my entry point. Stops position below and targets at those levels. So and this is the 50% retracement for the shark pattern. So this is the default target at 50% retracement. And again, the shark pattern, it can offer us the 5-0 opportunity to reverse the price. Okay. At 50% retracement, I will not be surprised to see silver starting to trade lower. I'm not saying the price tends to break this structure or not, but sometimes you'll not, sometimes you'll break. But it will offer us with a higher probability. It will offer us a possibility or an opportunity to make some points or to take profits. With some points from this level, but again, the pattern that I'm interested to trade is obviously this bullish sharp pattern at 1618 extension, positioned at 1124, If that happens, we never know if that will happen or not, but if that happens, it allows me to enter the market with a friendly risk-reward approach. So my friends, traders, I hope you enjoyed this video. I'm sorry if I didn't cover some of the charts that you are used to trade. I will try in the next time. You can always contact me and try to get my opinion about something that you are interested. So just try a contact. If you enjoyed this video, please press that like button there below the video. Thank you for being here once again. Be disciplined with your trades, and well, safe trades for everyone. Have a nice week.